Fantastic news there for the African Development Company there. So now let's go to our first conversation. 2 years into President Tinubu's administration, we're still staying on that. Nigeria's capital market has defied expectations, surging over 100% despite inflation, currency swings, and debt concerns. But how sustainable is this rally, and what is really driving it? To help us unpack the numbers, the reforms, and the road ahead, we're joined by economist and market analyst, Mr. Mukhtar Mohammed. Mr. Mukhtar, it's good to always have you on the program.
Thank you, Will. My pleasure.
And so, we're just looking at what's happening for President Tinubu's regime, his reforms, and the upheavals we've seen in the markets. How sustainable is the capital markets bullish run, given the lingering inflation and debt concerns we're seeing here?
Well, Will, the sustainability of the capital market is going to be a big challenge, definitely, because, again, if you look at that data that came out from the Nigerian Stock Exchange, you realize that about over 99% of, 92.1% are foreign investors that have left the market. And so most you have are the Nigerian investors, and they are mostly retail investors. And when you have retail investors, they are not long-time players. They are players that are there for the short time, and sometimes because they have needs for this fund to meet their needs, maybe immediate needs, school fees, house rent, and others. So it's always difficult for you to very difficult for you to see those sustainable bullish run. That's why you see, when you see these runs, after some time you see that the market will now go down a little, then profit taking comes in. But if you have those long-term investors, the foreign investors, that's when you begin to see those long-term sustainable bullish runs. So, and again, you don't have so much of institutional investors in the market that are there for like 2 or 3 years, because even the pension fund administrators have, it's just 25% they are allowed to invest into the capital market, and some of them prefer to put that in the fixed income space rather than the equity market itself. So definitely with that, you will not be able to see the kind of reforms that you should see. I mean, you won't see the kind of bullish one you should see in the market.
So let's very quickly, we see the all-share index. When President Tinubu came into power, we saw the all-share index at 52,973 points. That was in May 2023. But currently, this year, what we're seeing currently is about 111,000 points, 818. What do you think? But if we look at it, just look at those numbers. Let's look at GDP as well. We see GDP in terms of figures in dollars at 187.64. And after the rebasing, we're seeing it at about 217. Don't you think that while the local market is booming here, we're seeing a kind of disconnect with the macroeconomics? That's the GDP is looking smaller, the economy is looking smaller. What do you think? What explains this paradox of record equity gains, and we're also seeing declining GDP in dollar terms?
Yeah, Will, you also have to know that reforms have different sectors that definitely get positivity. The reforms will affect positively. And again, if you look at the current reform of President Tinubu, you realize that the capital market has been the major beneficiaries of those reforms. So I'm not surprised that what you've seen in terms of the numbers, you realize that those removal of subsidy, floating of the naira, all was beneficial to the capital market, especially the financial stocks. If you look at those numbers critically, you realize that the kind of numbers in terms of appreciation that had helped the exchange to where it is was largely driven by the financial stocks. Because when you look at other stocks in those space, like the manufacturing, the telecommunication sector, you realize that sector were really those that were affected by the floating of the naira. You saw huge losses were taken by some of those conglomerates and companies. But when you look at the financial sector, you saw those positive numbers, and those are largely driven by the reform. And that reform also have driven a lot of capital also into the market up to this moment. The recapitalization of the banks is still ongoing, but again, you could see the positivity that is causing to the market. So those disconnect is expected, because what we have seen thus far, I think the only sector that really benefited from the Tinubu economy policy is the stock market. And in terms, when you look at the stock market, you also depends on which side of the stock market you are. If you're in the financial stocks, it has really grown by, most of the stocks have grown by almost 200%. If you are in the, that's when he came to power. And if you're in the oil and gas sector, so you've seen some stocks move by over 500%. But if you're in the manufacturing sector, you're in the cement sector, then you see that those stocks are just gradually beginning to recover when we have this corridor of stability in the FX market. So definitely, that's what is causing that disconnect that you are seeing, because I think the reform as it stands now is almost one-sided, basically helping those companies that are listed and also those companies that are in the financial sector.
Okay, so what do you think, do we still need more reforms, or do we still need more policies to be able to bridge this gap? What do you think should be done to ensure that companies are not losing money to FX losses, and also to see a recovery for sectors like small companies that are doing business in the country?
We only one thing needs to be done: stabilize the exchange rates, and those companies will begin to enjoy the kind of returns that everybody expected them to do, and that will have a snowball effect into the market. If you don't stabilize the exchange rate, you continue to see some of these companies continue to bleed, and those small companies also will suffer. I keep saying that even if you don't, even if what we produce locally we can consume, the machineries to make it into finished good, we need to import it. So I think the government, I keep saying the government should look at those policies, looking at those machineries that will put some companies, those companies that import those machines, what can they enjoy in terms of tariff? And we've seen the president came out with those tariff policy that there will be zero tariff for agricultural items or food or household items, but that have not seen the light of the day. And then we need to attract more foreign investors into the market. We are not seeing that up to this moment, despite all the policy that have been driven by this administration. If you look at the data from the stock exchange that said over 90% of foreign investors exited our market, I think that's not good. So we need to stabilize the FX. Once you stabilize the FX rate, especially in a developing economy like ours, then you see the market will react positively, and then you see that every other aspect of the economy will begin to enjoy a little bit of buoyancy.
Okay, recently we had the president say that the economy is on course, but he also wants the economy to grow to a $1 trillion economy. Are we on course here? Is the capital market robust enough to give Nigeria take Nigeria to a $1 trillion economy? And take into consideration poor infrastructure, poor retail participation in the capital market. Can the capital market help to drive this ambition?
A $1 trillion economy is going to be elusive as it stands now, because to achieve a $1 trillion economy, you have to achieve double-digit GDP growth. And as it stands, we are struggling to even make 3.7, 3.4. So definitely that is going to be a mirage, because you have to achieve a $1 trillion economy, then you have to have a double-digit GDP growth for the next 10 years. I mean, or let's just say the next 5 years. You need to have a double-digit growth. So we are not saying that. So a $1 trillion economy is a mirage. But again, like you said, that should be largely driven by the capital market. And when you look at the companies that are listed in the capital market, how many of them are big players in the Nigeria economic space? You have not seen the Dangote. We're expecting the Dangote refinery to be listed. You expect NNPC to be listed. That has now been, or maybe even shifted, and that will not happen till the next 2 years. So those are part of the challenges that you definitely begin to see, and that's why I don't think that we'll be able to grow a $1 trillion economy as it stands now. We might try, but again, the GDP just have to improve. And when you talk about the GDP that we really have to improve, that we get to every part of Nigeria, is that informal sector. How are we able to galvanize that informal sector? How are we able to provide low-cost funding for the informal sector? How are we to bring infrastructure? How are we to reduce the high energy costs? All these things, if you factor them into what we have now, then a $1 trillion economy is a mirage. But it's not that it's unachievable. There's a need. There need to be a rejigging in terms of the economy policy, especially in regard to how you can help the informal sector grow.
Okay, we've just spoken about the big ticket players coming on board, which we are yet to see. What about the small players, the fintechs, ESG investments to diversify the markets? Do we see this coming into play, possibly holding the market up for that $1 trillion mark we're heading for?
Yeah, Will, that should happen because, again, if you look at the rebasing was done as a result of these fintech companies. So definitely that means you are getting a new player into the economy, and then there's a new player that have been able to raise Nigeria become the largest economy in Africa again. So when you have that in the exchange, definitely that will be a game changer. But again, that also will be a game changer for the fintech company, could also be a game changer for the financial sector. Because what we will see that a lot of financial sector are in the holding company leverage. And so once you have those holding companies, they're also having the fintech. Most of these banks are now holding companies. They have their fintech sector, and that will create a lot of competition. And at the end of the day, once the competition comes in, then the market is definitely going to benefit because the numbers are going to improve because of ingenuity on all sides to make sure that they are able to give their shareholders value. So that will be a game changer. Hopefully that happens when we see some of these fintech companies, which happen now these days, happen to be those that are really driving the financial inclusion, even in urban and rural areas. That, for me, would be a game changer.
Mokhtar, always great to have your insight on the program. As reforms we see continue and the market continues to mature, we'll be watching to see whether this momentum turns into meaningful growth across the wider economy. Thank you so much for joining us this morning.
Thank you for having me, Will. It's a pleasure.